Hi everyone, welcome back to part 2 of substantive procedures, and this is tutorials with Tabby. I'm sorry I don't have a fancy introduction or sort of a thumbnail to introduce myself, but we tried. The content is what matters, right? So let's work with what tests of controls are. So the most important part, and I don't know why I put this as a third bullet point, is firstly look at it from the perspective of the auditor, who we are, and the company that we're auditing. So in a test, you will typically be a audit accountant, an audit senior on an audit, and you're going to have to either design or evaluate a test of control. So why do we do test of controls? So organizations acknowledge that everyone makes mistakes. And the role of the auditor is to make sure that these mistakes that the company says they are correcting are actually being corrected. And that controls speak to 4 things that I will mention now in the next slide. So from the perspective of the company says that the bank reconciliation is reviewed and signed as evidence of review. So when we come in, we say, hey, show us proof that this is actually reviewed and signed. And that is what a test of control actually is. From the perspective of the company, they already have the control. You will not typically be asked to create a control procedure. You will be asked to create the tests of controls of the control procedures that typically exist. So let's say you get a long scenario, and that scenario will speak to what this company does, and you will have to identify that particular control. So how do you identify a control? Controls have 3 characteristics. They're either preventative, they're either detective, or they are corrective. So a preventative control is one that stops something from happening before it even happens. So if I say the company needs to have alphanumeric passwords that stop someone from entering unauthorized data onto your computer, that means that this company, we need to audit the fact that this company has this policy in place. And a detective control is one where there's a bank reconciliation that's being prepared by the financial accountant. The financial manager reviews and signs the bank reconciliation as evidence of reconciliation being reviewed and follows up on any reconciling items. So that's how you would detect if there's a misstatement. Now, say these reconciling items are a problem. There's 10 Rand more in our bank account, or let's say 100,000 Rand more for materiality purposes. There's 100,000 Rand more in our bank account that shouldn't be there. It should have been allocated to something else. Then you can pass a journal to correct that particular misstatement. So from a company's perspective, they have their controls in place. They have a control environment. And if you remember that framework, that fancy framework with control environment and all those other things, the IT governance, controls form a part of that. The entity has this in place. So we then need to assess if the entity really has these in place. So the 2 examples I just used basically describe the 4 control objectives. And with these 4 control objectives, you can be able to understand how to formulate your own control. So someone getting into your computer, for example, and entering unauthorized data, that relates to the first and second control objective. And the bank reconciliation, that relates to the second and third control objective. So now let's start with speaking about these control objectives that I'm talking about. Control objectives are the reason why controls are done. So we need to ensure that whatever control the entity has in place, remember we have our auditor's hats on, whatever control that the entity has in place need to fulfill these particular objectives. So master file access is the nest, validity, accuracy, and completeness are the eggs in the nest. If master file access is poor, validity, accuracy, and completeness, no matter how well the bank reconciliation is reviewed and signed and everything, if anyone has access to the bank account or the bank master file, that means that effectively you're not sure if the data is valid, accurate, or even complete. Someone could have deleted a line, someone could have paid themselves, someone could have entered an extra zero into the payroll account. You do not know. So that's what I mean when I say master file access is the nest of it all. So these are the control objectives that we always need to keep in mind: validity, accuracy, completeness, and the overarching one, master file access. And master file access is simply the logs. And I used to get so confused in auditing classes when everyone was like, yeah, the logs, the logs. What are logs? Logs are reports of who logged into what system. So if somebody logged into the payroll system and this person's not supposed to have access to the payroll system. So let us say someone in the goods received function logs into the payroll access system and adds an extra zero. The master file access means that there's a poor control. There's a lack of control taking place. And that lack of control will lead to a risk, will lead to material misstatement actually. Not even a risk of material misstatement. It'll lead to material misstatement. And our role as auditors, remember in our ISA, is to obtain sufficient and appropriate audit evidence to ensure that there's no material misstatement, whether due to fraud or error. So master file logs are effectively just these really long reports of who's logged into the system, the payroll system, how long they've been in the payroll system for, and it basically has their credentials, their login credentials. So if you inspect the master file access log and you see a name, because so what typically happens is that the entity will give you the people that are in the payroll function. But if you, for a sample of master file logs, or if you just assess the logs over the whole period and you see a name that's not on the list of people that should be there, that is something you need to follow up on, because that's a control deficiency. That control is deficient. It is not operating as intended. So as I said, in order to complete a test of control, you always need to consider validity, accuracy, completeness are 3 eggs, and the master file access, which is our nest. So what you're effectively looking at is what could go wrong. We've been speaking about this. Payroll function, somebody could add an extra zero to their bank account. And then what's our control objective? To ensure that the master file access is going to be preventative to someone adding an extra zero to the payroll function. And that's the risk. So you need to merge the risk with the control objectives, and I should have written this in the slide, plus our procedures, the RIOR CIA, which is what we spoke about in the last video. If you haven't watched that, please go back to that video first. And you look at RIOR CIA to create your control procedure. But within RIOR CIA, only 4 of these are procedures for tests of control. Reperformance, you can reperform a control. So you can, for example, reperform a schedule, and see if you get the same results. So it's not the same as recalculation, because recalculation is a substantive procedure. And why I say recalculation is a substantive procedure is because you are trying to get to a predetermined number. Whereas with a control, you are trying to determine if a particular action takes place. So you are reperforming that control activity. Second one is inspection. This is both a control and a substantive procedure, test of detail kind of procedure, because you can inspect an invoice to make sure that the balances are accurate, or you can inspect the bank reconciliation to ensure that it has been reviewed and signed by the financial manager. Observation. This is a purely control procedure because you can't exactly observe an invoice. You inspect an invoice from a substantive perspective. So observation will definitely be a control procedure. You cannot have a confirmation that a procedure has taken place. Inquiry is something you can also ask, because there are two things we need to understand here. We need to know whether or not the control actually exists. So the company can write it really nicely in their report saying that we have this control and it does this. So you go to the financial director and say, hey, do you actually review the payroll increases at the beginning of each year? And is this corroborated to the the board minutes of meetings? But doesn't that seem flimsy to you? Inquiry of minutes is not enough. You need to inspect, for example, inspect the minutes of the board meetings for the increased percentage, and inspect, for example, of salaries, whether that payroll increase has been adequately accounted for. So that's what we're saying. What we're going to do, either reperform, inspect, observe, or inquire. What we are going to look at is the minutes of the meetings and a sample of pay slips. And why are we going to do that? To ensure that the payroll increases are reviewed and they correspond to the actual payroll increases themselves. So what's approved is what is paid out. So you always have to have your what you're going to do, what you're going to actually look at, and why we're even doing this in the first place. So I used to say, for example, reperform the bank reconciliation, but not the why. So I wouldn't get the marks in audit, for example. So I see what mistakes I made in my CTA, and the whole purpose of this is to make sure that you all don't make the same mistakes. So you reperform, you inspect, you observe, you inquire. A caveat though, observation on its own is insufficient as a form of audit evidence. So if you're going to observe something, you have to either inspect or reperform the action to analyze whether or not it has taken place and whether it is operating effectively. Inquiry, again, is one of the least persuasive form of audit evidence. Why? Because inquiry on its own doesn't stand. Someone can lie. It's just like observation. On its own, it can't stand. Because someone can just say, yeah, we do it. Or someone can just say, someone can just do an action when you are there at that point in time just to show you that it's being done. But we need to make sure that the control is operating effectively throughout the whole year and not at a period in time. So you can't just observe, because observation takes place now, but what if they don't do it tomorrow? What if they didn't do it yesterday? What if they didn't do it last month? So you can't just observe the financial director or the financial manager rather signing and reviewing the bank reconciliation, because that is not an adequate control. You can observe it, but then you have to actually inspect it for evidence of review and to ensure that it has been signed and authorized by the financial manager. So what we're going to do, what we're going to look at, and why we're even doing this in the first place. Before I even get to an example, we need to speak about distinguishing between controls and processes. So I love payroll. It's a very interesting function, I think, and a lot could go wrong there. So I used payroll as an example again. So firstly, there are two parts to this. The staff members swipe their clock cards, and the payroll clerk prepares a clock card summary recon, and it's reviewed by the payroll manager. So you could say, observe staff members swiping their clock cards to ensure that the clock cards have been swiped by all employees. Brackets, validity. But let's bring it back. That's not a control. You wouldn't get any marks for that. Why? What's it detecting? Tell me. Just swiping a clock card. What's it detecting? What's it preventing? What's it correcting? This is what we call a process. A process is what facilitates the control. It is what makes sure that the control happens. A bank reconciliation being prepared is not a control, but it is the review and the signature of the financial manager performing it that makes it a control. So now let's look at this. If the payroll clerk prepares a clock card summary recon and it's reviewed and signed by the payroll manager, the reconciliation will prevent fictitious employees from swiping. So that's the validity part of it. So you can cross-check the clock card summary reconciliation to the payroll register, and that makes sure that accurate processing can happen for payment for all the employees on the payroll master file. And there we go, guys. Validity, accuracy, completeness. Tick. Master file access, you'd have to assess the logs to make sure that the payroll clerk has the right function to fulfill that particular role. So the payroll clerk should only be able to write information, type information in, but not be able to release the payment. The payroll manager should not be able to type any information in. This is what we call read-only access, but can also have the permissions to release that payment. So typically 2 people release the payment. Let's say the financial manager, the payroll manager, and the financial director. Those would be the 2 people managing it. So if you are learning controls in a very theoretical way and you're not applying any consideration of what would actually happen, let's think about it. If I am the payroll manager and I also have write access and read access and approval access, where's the segregation of duties? So this is where the auditing all comes together. There need to be different people assigned separate permissions. And this is what master file access is. You would assess the logs to see if any data has been changed. So inspect logs for the entire financial period to ensure that accurate payment has been processed and all employees who have read access to the payroll master file have not modified any data. And where do we check if data has been modified? This is something called the master file amendment form. This master file amendment form shows that payroll, okay, fine, so-and-so got a pay increase of 200%. But so-and-so is the one that actually edited that detail. So-and-so changed their banking details, but Mrs. Smith is actually the one who processed that change. So we can find out why that change was processed. So from a master file access perspective, what we can look at is, say it like this: inspect the master file amendment form for any changes. Should there be any changes to, let's say, banking details, follow up with Mrs. Smith, in this case, the payroll clerk, to understand why there were the changes, and inspect the proof of bank details to ensure that valid changes have been made. That is making sure that invalid payments are not going out to the wrong person. Because I could easily, as the payroll clerk, change the banking details and somebody just approves it and that's it. So between number 4 and number 5, pause this video please, read this very quickly, and you can say which one is a control and which one is a process. I know you're going to be inclined to say the longer one's a control, but it doesn't always work like that. So here we're speaking about a clerk signing a goods delivery note and it generating a sequentially numbered goods received note. So that actually prevents us from goods being stolen, because if the goods, so when I say us now, I'm talking about the company. So the company makes the clerk, the goods received clerk, sign a delivery note and the quantity of goods received against the order. This is to make sure that the company does not get incomplete orders. And then the system will automatically generate a sequentially pre-numbered goods received note, meaning that there will be no discrepancy from the goods delivery note and the goods received note. This is to make sure that our stock is complete. So now, what does this mean? This is a preventative control because we are preventing the goods that we receive, the quantity of goods received, being incorrect. And the question is, how do we then test this control? So you'd have to inspect the signature of the goods delivery note. So inspect the signature of the goods delivery note to ensure that the goods received clerk signs for these goods. And what's that preventing? That's preventing this part of inventory items not being received, actually not being received. And then the original goods received note is sent to a supplier and a copy sent to the creditor's clerk. That's obviously a process, something that happens to facilitate something else. Typically, we're probably going to have creditors in this inventory function, and this is to help the creditor's clerk in performing their duties. So we will not audit this because this is a process, but we will audit this because that is a control. So let's speak about directions of testing. This is a topic that is not often covered well, but have you ever heard of the concept of floor to sheet and sheet to floor? If you haven't, I'm glad you're watching this video. Let's use serve. If you don't know what that means, please go back to the last video on substantive procedures. Completeness, existence, rights, because it's an asset, valuation, and allocation. Let's say it's a car. To make sure this car exists, what do? Take a sample from the general ledger and you go and inspect the car on the car floor. So you go from the sheet, which is the general ledger, to the actual floor. To make sure that the car has been calculated correctly, you go from the general ledger to an invoice, and you assess that invoice that we purchased it for to ensure that the amounts correspond. To make sure that we have the rights to this one. So, sorry, not accuracy, valuation and allocation. That's what I was speaking about. That's what I should have said. COCAC is classes of transaction assertions. To make sure that we have rights to the vehicle, what do? We select a sample of vehicles from the general ledger to ensure that, and then we go and inspect a contract to ensure that we actually do indeed have the rights to this vehicle. But what if I asked you to provide evidence, and this is both a test of control and a substantive test kind of thing, the direction of testing. But what would you do if I asked you to provide evidence that the general ledger for vehicles is complete? Do you go from the general ledger to the general ledger? Because how do you make sure that something's complete? This is when the direction of testing changes. If I asked you to make sure a vehicle general ledger is complete, you go to a car dealership, pick a sample of cars, and trace those cars back to the general ledger. And this is what is known as the floor to sheet. So for completeness is on its own for both classes of transactions, our COCAC, and our SERV, which is your balance sheet items. The directions of testing for completeness change in comparison to everything else. Okay, so as I said in the previous video, I'm working everyone towards ITC. So what we need to do is we need to do an ITC question. This is an ITC June 2018 examination. I think it's paper 1, part 2, but I'm not sure. Once I'll add the description or the link in the description box below. So a team of technicians work through the routine preventative maintenance service checklist. Each item is checked, and if repairs are necessary, the senior technician logs both the check and the details of the repair electronically on FMSS. That is a process. It's merely being logged. It is not preventing, detecting, or correcting anything. The system calculates the cost of the repair. If the vehicle is subject to a maintenance contract, the repairs are carried out. If not, the service manager and client telephonically agree on the repair costs before proceeding. Agreement of repairs to be carried out is confirmed by the client via FMSS immediately after the telephone call for authorization by both parties. At the conclusion of the service, the senior service technician digitally signs the checklist on the system to verify that the service has been completed. The manager meets with the client to discuss the service, and the client digitally confirms receipt of the vehicle and satisfaction with the service and repairs. The service manager also digitally signs via FMSS to conclude the transaction, and the cost of repairs not subject to a maintenance plan are charged to the client's fleet account. Clients are not invoiced are invoiced at the end of each month, and invoices are payable within 30 days of the invoice date. I get this question, have not gotten the required yet. What do I do? Firstly, relax. This is the part where you highlight your stuff and you look at what it is. So the team of technicians working through the routine preventative maintenance service checklist. They're working through a checklist. It's not preventing, detecting, or correcting anything. The system calculates the cost of repair if the vehicle is subject to, so that's the system, that's the master file we're looking at, FMSS. That is the master file for everything. So if the vehicle is subject to a maintenance contract, so we have one branch now, the maintenance contract people. The repairs are immediately carried out meaning that these people shouldn't be charged for repair. If not, there's a telephonic agreement. But can we trust the telephonic agreement? You already know the answer is no. We have to be able to inspect something. And then the agreement of repairs to be carried out is confirmed by both parties via the FMSS immediately after the phone call for authorization by both parties. So that's a control. So in our testing of controls, we need to make sure that both branches are accounted for. If there are people with a maintenance contract, they shouldn't be charged. But if there are people without a maintenance contract, one, we need to make sure that the cost of repair has been calculated accurately, and we need to make sure that this is actually valid because we need to ensure that the agreement of repairs is signed by both parties. At the conclusion of the service, the senior service technician digitally signs on the system that the service has been completed. That's one control. The manager meets with the client to discuss the service and hand over a vehicle. What's that preventing? What's that detecting? What's that correcting? They're just handing over the vehicle to the client. So we can't corroborate that. We can observe that, but that's at a point in time. And as I said, the control has to be operating effectively for the whole period for us to be able to rely on that control. Then the client digitally signing, confirming receipt, that's another control. It's preventing us from recording fictitious services and repairs, and then thereby, making sure that revenue is not overstated, those kinds of things. But that goes to the substantive side. And then the service manager signing on FMSS to conclude the transaction, that's also going to be something that we have to take into account as a control. The cost of repairs to vehicles not subject to a maintenance plan being charged to the client's fleet account, what's that? That's a control that we can assess because FMSS automatically charges or allocates to the client's fleet account. But what could go wrong here? What could go wrong here is that the wrong client could be charged for the other client. So we need to then test the controls over the allocation of the client's fleet account. So there's a way to test application controls, and that's to try and add fictitious information with the client's permission to add fictitious information into their system. But if that's not an option, then you have to re-perform the calculation that the system has for a specific sample of the client's fleet account. Them being invoiced at each month, I don't think that is a control. That's a process. It's not preventing, detecting, or correcting anything. And invoices being payable within 30 days, that's for debtors. We're doing maintenance of vehicles. Describe the tests of controls you'd perform on the system of preventative maintenance on the FMSS. Important. You can rely on the general computer controls. So what does this mean? Do not mention any controls over GITCs. This will get me no marks. So always look for exclusions in a test or exam. So this is my thought process that I documented as I was going through this paper. 1, look out for processes and look out for controls. We've already discussed this. 2, we've just discussed this. 3, before we perform a test of control, we need to ensure that it's there. So 1, I'd go inquire with the service technician or the service manager, or I'd go back to the question actually. I'd go and inquire from the senior technician who actually logs the check and the details of the repair on FMSS. So who logs it when they're not there? Because they are the start to the process. Without the logging of the service, what happens? I don't think that control would be operating effectively, because some services might not be recorded. So we need to ensure that this control takes place and that there's a replacement individual. Point 5, selection of a sample of repairs for validity. The maintenance contracts are in place and therefore no charge to the client has to happen. So where there is no contract, we need to inspect FMSS for validity in order to ensure that both of them have signed electronically and agreed upon the charge amount where there's no contract. And where there is a contract, we need to actually inspect that agreement contract. That covers validity. How do we make sure all the information is accurate? We need to make sure the amounts per the FMSS agreement for the clients without maintenance contracts equal to the invoice provided to the client. So we need to inspect the FMSS invoice and the agreement to ensure that the amounts correspond. And completeness. As I said, the direction of testing changes. From the transaction data, select a bunch of invoices and inspect those invoices, trace them to FMSS to ensure that they have been recorded, that they have been allocated correctly. And then master file access. As we speak about master file access, look at the logs, assess the master file amendment, and follow up on any master file amendments. That's basically our audit procedures, and that's how we get full marks. Let's see how well we did. So this was my solution that I drafted when I went through this paper. So I inquired from management, who's the senior technician, whether this control takes place in the organization. So this is inquiry. On its own, doesn't stand. As you can see, I didn't put a control objective next to it because on its own it does not stand. Then, for a sample of repairs selected randomly from FMSS, inspect maintenance contracts for signatures of both the customers and the service managers to ensure that the contract is valid. So these are the ones that have maintenance contracts in place. So that's validity. If there is a maintenance contract in place, the ones with maintenance contracts, inspect the client's account. Why? Why are we doing this? To ensure that there is no invoice that has been allocated to the client. That's accuracy. If there is no maintenance contract in place, select a sample from FMSS to inspect the agreement of repairs to ensure that the agreement is authorized by both parties and it is valid. So with all of this, there's a train I'm following. For a sample of repairs, select randomly from FMSS. I'm bringing it in. I'm scoping something in. Then I speak about the procedure I perform. I inspect what? The maintenance contracts for signatures. Why am I doing this? For both the customers and the service managers have signed, and that means that the contract is valid. So it's validity. And then now for accuracy of the people who do not have maintenance contracts, for a sample of digital signatures on FMSS that do not have maintenance contracts. So I've zoned it in, I've brought it in. I've shown my examiner that I know what samples are because I can't test every single maintenance contract that is there, or I can't test every single invoice that is there. So typically we select samples when we're making sure that controls have been performed adequately throughout the year. So inspect the invoice to ensure that the correct amount is charged to the client's fleet account. How do we do that? I mean, what control objective is that? That's accuracy right there. For a sample of repairs performed from FMSS, inspect the digital authorizations to do what? to confirm that the senior service technician, not technical, my bad, the service manager and the customer have signed for the completion of the service and collection of the vehicle. That is a validity test. I don't know why I added completeness. I think the slide's just a mess. Number 7, for a random sample of customer invoices, inspect the FMSS system to ensure that repairs have been completed have actually been recorded. So now we're starting from the portion of this invoices. We go back to the FMSS system to ensure not validity, completeness. My goodness, my solution was a mess. To ensure that all repairs have been recorded. Then for a sample of FMSS clients, use CATS to re-perform the cost allocations over the client fleet account to ensure that the correct costs have been allocated to the correct account. Again, accuracy. We've mentioned all the eggs, but come on, let's speak about the nest. To ensure that no fictitious, just add ensure here, that no fictitious changes have occurred in the master file, inspect the daily activity log of changes throughout the financial year and follow up on any discrepancies, which is master file access. So that's my solution. I spoke about samples, I zoned it in. I spoke about what I'm doing, what I'm looking at, and why I'm even looking at it in the first place, which corroborates very well with what I was speaking about all throughout here. And then this is the solution that Psycho had. It's paper 2, question 1. There we go. So discuss with the service manager that the controls listed are in place. 1 mark, I would have got that. And who does it when they're not available. I said this earlier, but I just didn't write it down, so I wouldn't have gotten that mark, so -1. Attempt to gain access to the approval functions of any person in the process. I said this earlier, I just didn't write this down. -2. For a sample of repairs performed, confirm that there's a valid maintenance contract in place and inspect the client's account to ensure that no costs are allocated by the system. Tick, tick. If no maintenance contracts exist, inspect for an approved authorization by both the client and the service manager, tick, and agree to the invoice issued to the client, tick. I've gotten 5 marks already. For a sample of repairs performed, ensure that the senior service technician has signed that the vehicle has been completed, tick. Service manager has signed, tick. Client has signed, tick. Why have they signed? You need to ensure that the transaction has been concluded, the service has been completed, and the client confirms receipt of the vehicle. With the permission of CLEs, verify that application controls are in place to calculate and accurately and allocate are working effectively. So how would we do that? I do not think this is the correct wording. You can't recalculate the calculations. You re-perform using CATS, computer-assisted auditing techniques, the calculations performed by the system by entering a number of fictitious repair transactions and test whether these have been allocated or costed correctly and ensure that the correct costs have been allocated to the correct account. I had something along those lines here. Use CATS to re-perform the cost allocations over the client fleet account to ensure that the correct costs have been allocated to the correct account. Through inspection of the log of changes to the system, verify that no changes occurred to the application controls over allocations throughout the period. I need to go back. I added this in later. In my defense, I added this in later when I was speaking through the answers, but I did not write it down. which is typically a downfall we all have. But all in all, I got 11 out of 14, which isn't that bad. No, I got 12 out of 14, which isn't that bad. And I would have gotten these marks. I'm just not happy that completeness had not been addressed here in this solution. So yeah, that concludes this video. We discuss what we do first, and then the second one I'd like to speak about is that we inspect what? The client's account. Why? To ensure that no costs are allocated to the system for the ones that have a valid maintenance contract in place. So yeah, that is it for this video. Please like, thumbs up, subscribe, all those nice things, and have a lovely day and a wonderful study session.